Is the PNB MetLife Capital Guarantee Plus Gem Solution Plan a genius blend of growth and protection, or just another clever name with limited gain? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So this policy is a combination of two plans: PNB MetLife Guaranteed Future Plan and PNB MetLife Goal Ensuring Multiplier Plan. So some of the key features of the policy are: you get assured return of premiums with guaranteed benefits, you also get comprehensive life insurance coverage for the entire policy term, and you get the opportunity to benefit from market link returns, and partial withdrawals are permitted after 5 years for added liquidity, and you're eligible for tax benefits as per the prevailing tax laws. And this policy is a combination of an endowment and ULIP, which is a market link policy. So if you want to know more about both the policies, this policy has combined like PNB MetLife Guaranteed Future Plan and PNB MetLife Goal Ensuring Multiplier Plan. Both these policies have been reviewed in detail in our channel. So if you want to look into those videos, you can click the link in the description below. To help us make an informed decision, we need to understand why combining insurance and investment like this policy is a bad deal. So combining insurance and investment in a single product may seem convenient initially, but it often compromises both objectives. Bundled products like endowment plans and ULIPs claim to offer life insurance and investment growth in one package, but in reality, they serve neither purpose effectively. So here's why you should be cautious of these bundled offerings. Number one, high premium, low life cover. So bundled plan demands significantly higher premiums. For instance, if you pay 50,000 rupees per year in a ULIP or endowment plan, only a small portion goes towards life insurance. Result is the rest is funneled into investments. So in comparison, a pure term life insurance policy provides you with a robust coverage like 1 crore or more for just 10,000 to 15,000 rupees annually, leaving you free to invest the rest more efficiently. Number two, ULIP comes with high hidden charges. So ULIPs are notorious for their layered fee structure like premium allocation charges, policy administration charges, fund management charges, and mortality charges. After deducting all these charges, only a fraction of your premium is actually invested. These charges can eat into your returns, especially during the initial years of the PNB MetLife Capital Guarantee Plus Gem Solution Plan policy. Number 3. Low returns from endowment and ULIP plans. Endowment plans primarily invest in low yield debt-like instruments and typically offer returns of just 4 to 6% annually, barely outpacing inflation. ULIPs may provide slightly better market link returns, but after deducting various fees, the net returns often fall short of what you would earn through mutual fund SIPs. Number 4. Ineffective in meeting long-term financial goals. If you're expecting to build wealth or meet significant life goals like buying a house, funding your child's education, or planning for retirement, by investing 50,000 rupees annually in a bundle plan is unrealistic, because these products offer neither sufficient life insurance protection nor adequate long-term investment growth. So what is the final takeaway from this video? Like, what is the smarter approach? The smarter approach from a personal finance standpoint is to keep insurance and investments separate. So what you should really ideally do is buy a pure term life insurance plan with an adequate sum assured to protect your family, and take a separate health insurance policy, preferably a family floater, and maintain an emergency fund covering 6 to 12 months worth of expenses, including EMIs. These three pillars provide financial stability and security, allowing you to invest without compromising on protection, and it also has a high agent commission. So once this foundation is in place, focus on building a diversified investment portfolio based on your financial goals, risk appetite, and investment horizon. Choose efficient tools like mutual fund SIPs, PPF, and other tailored options, not bundled insurance investment products that dilute both benefits.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional personal guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.